Hey everybody, Jason here with Theta Profit. Um, I got a message from Troy Davis, my old buddy apparently. Um, Wanted to know a couple things. First question he had, pretty easy. Um, he opened up a debit spread, no, a credit spread. I believe it was a 1750 and a 15. Wanted to know if it's above 1750, do you keep everything? Yes, you get back your collateral and you keep your premium 100%. So here is where I always recommend going, so you can see what this will do over time. Optionsprofitcalculator.com. Very easy to use. And when you're starting to do spreads, when you're starting to do any new thing with options, even basic, this is a really good understanding. It's not going to really teach you the IV or implied volatility component to things, but if IV stays the same, which stocks typically are either volatile or not, this will give you a really good indication of where things should be. But I was just looking at, let's see, how do I get this over here? Capture hood and go display capture. Nope. This one? Yes, this one. Let's see. So we need to turn up. Okay, turn this off. So I was just looking at, I'm not familiar with the stock that you particularly asked about, but I just wanted to see its overall trend. So let's go back like 180 days. Okay. So first thing to know about volatility. Implied volatility is a result of what's happening with the stock. But basically, the more it goes up and down, the more premium you're going to collect. So when something moves a lot, even if it's against a direction, calls and puts are going to be worth more. So as you can see, for many, many months, this thing did not move. Between, what is that, like September, even through the end of the year, it really didn't move, right? It stayed in the range $3, $4, $5. And then all of a sudden we get towards, basically this last, what does it look like, week or so? And we have a whole lot of movement. So this movement here, because it's moving up so much, now all of a sudden premium is going to become a little bit higher, because now you look at the stock and computers calculate this, but we can look at the stock as traders and see this stock is moving. It's not just staying still. So it definitely has the potential to keep on going. It's nice to see. I'm sure it's a low float stock, just based on the fact that there's so much movement, low cost, and I've never heard of it. And the fact that it went up so much so quickly means that there's not a whole lot of market cap. So people can buy the stock, and price is going to go up and react more than something like a Facebook or something that there's just a ton of shares and really expensive. So I think the 17, 15. So your break even is going to be somewhere between there. I have no idea how much premium that you collected. So you must have sold this maybe. I think you must have just sold it today, seeing that it was going up, and you wanted to catch some of the upside, is what I'm guessing here. But you didn't want to, maybe you didn't want to buy a stock at this low price. This is not just a few things like overall. You know what? My face is right in front of this. Let me bring this up. Sorry. Let's just go 1, and let's go SunW. Get rid of all these news. Okay. So over the past week or so, this thing has ripped up, right? We don't really know where support is anymore. Since there was some bouncing off of highs here and lows around here, given it, but this is mostly pre-market. I think you should be relatively safe with that spread. This is such a low cost stock. It might be worth doing. If I was to look at this and I saw some of these patterns here, this is something I may just buy the stock or buy a call. If you were paying attention during this run up, I mean, that's a $3 run up right there. You could have bought calls and taken quite a bit, but that's not the strategy I typically teach or even really recommend. But that's what I see when I see all this movement coupled with the high volume. This is showing at this point here. It looks like a little bit oversold. Same thing right here. Anyhow, let's get into what this looks like long term. Let me see. Did you give me an expiration date on this? Okay, so you got the monthly on this. It might even be just the next one available. So we're gonna go back to, let's go find this options profit calculator. So you did a credit spread, and this is nice. So current price 19. We bought, okay, so the February 19th, you bought the 15. You bought the 15 put, and you sold 17.50. And let's go, that's fine. Okay, dollar loss. Okay. Make sure this looks correct. So the 15, about the 15. This really doesn't even show. Okay, we need to see more of a range here. So what I'm looking at here, we want to see what happens when it goes up, down, sideways, etc. But since it's not even showing us below 1740, we need to go to, where are they? Graph range. So we'll go down to $10. All right. So I know you paid less than this. So you said you were $8 into the green. I don't know at what price this was that you sold in. But here's what's there. This is what's happening, like very initially. So like right in the beginning of this. Hopefully we can all see this. Let's zoom in a little bit. So this is let me see what it was during market. Sorry for hopping around so much. Where it closed at, okay, it did close at 1916 and it's down a little bit, 1874. So after market, it goes up a little bit. So initially, when you see a little bit of movement here to the upside, so you said I think you were up $8. So you'll see very little movement, and unless you perfectly top tick this, like in which case like the price was coming down a little bit, you sold it and then it went back up, or if you sold it and then the price just continued to increase, you're never going to see a negative on this. But that's not usually the case. Usually a stock's kind of moving up and down and you kind of catch it where it can. I always look for something on its way down, and that way I'm collecting the most amount of premium I can. But this is what's going to happen. So if we look at this, obviously you collected more. This shows like it was $130 collected for this, is what the collateral is if you sold this right at market close. But these first few days, right, it can drop back down to 18, and I think after market, like right now, where did it close? 1874. And so down at 1874. Maybe tomorrow you might be down a few dollars. At least you should be down $3 or so from where you're at. And what you can see on this graph, basically, there's the two axes, time and price, up and down price, sideways time. So this stock can definitely go back down, and it might even look like pretty nasty at some point, right? Like, so this drops down to $14. All of a sudden, you're seeing that you're minus $50. But what it does is it has time. As time goes on, it can continue to go back up, or it can go way up and come back down. So as long as, like, you can clearly see by expiration, anything above that 1750, it doesn't show 1750 exactly, but anything above there, you collect your $130, or you keep your $130 that you already collected, and then your collateral gets released. If the price is up, so let's say you have a week till expiration, and this shows you exactly why. Let me get this a little bit higher too. And this shows why I generally will roll them out or close them a little bit early. A stock like this, I don't know. Maybe it has the potential to drop $5 after market or something crazy in the last couple days. I don't know. Tesla sure can. Tesla can sure move $100 in a direction during the day easily. So as you're waiting for this thing to decay, you get to, let's say, the second week in February, so Valentine's Day. We look at this, and where are you going to be? So if this stock is going to be, let's say, $23, $24, you have a couple days left. Well, let's say on the 14th. So you could wait. So your options are wait a final week, and collect your last $26. So that's only going to be the difference between like this 104 and the 130. So you can collect that last little bit, or you just close it out, or that's of course option number 2, just to make sure, just in case, because at that point, what's going through my mind at that point is not, oh, this is an easy collect the rest of this money. My mind is more focused on, do I really want to risk $24 or gaining $24 for the potential of losing 250? In my case, no, I never really want to. I don't want to put that much on the line. And then when we're down to that last week, we have less options because there's less value to be able to manage this thing. So you can see the price also can decrease, and maybe you show red a little bit. And like I said, super common initially. I have some open today that did that exact same thing. They're down a little bit. But as time decays, you're going to be able to collect the whole thing. And let's do that, right? Let's check this guy's Robinhood account. All right. So this guy is not a very good trader, obviously. He lost, oh my gosh, $1,500 today. And let's go total return. I think these are, yeah, these are the ones I opened today. So you can see minus $40. And this is 2 reasons. One, I wanted to open up quickly, so I didn't get the most I could. And let's look at this. What date was this? This is 7/5 or 2/5, right? Yep, 2/5. And we had 745, 740s. Oh, get on the right date here. It's only like 2 weeks out. 740, 745. All right, yeah, there's the current value. And I paid $1.10, so I enter the price now, but I can. I got, let's see. Nope, I'm in the wrong direction there. So I think I received $1 each. Yep, average credit $1. So this is exactly what I did for these options. You can see how wide this is. This is part of because it's a very volatile stock. And right now, because the price is at, what is Tesla at? 941. 941. That's why I'm pointing with my finger like you can see this. So you can see at right to the right of 840, it's minus $11, right? I'm minus, it shows, I'm minus $8. So you can see that happens. If it goes down a few dollars, it can go down $10, $20, $30. And let's say tomorrow it drops $50. Totally possible with Tesla, right? So tomorrow maybe I'm showing negative 63. I have 5 of them. All of a sudden it's showing 300. And oh no. So this is part of the reason some days I'm down, especially right after I open them. It's giving me whatever credit, and then the very next day it's going to show a negative if it goes down at all. Even very initially, even if it goes up a little bit, I'm not majorly up, majorly down. As it gets really close to expiration, that's when theta, which is the amount of money that you're going to gain per day, profit, is going to really go up. And you can see even a day before expiration, I'm usually at maximum gain. So when I get to these last few days, you know, especially if the stock had gone up, so let's say it goes up $20, $30 to $876, and I still have a week left on it, $13. I have $13 to gain if I wait a whole nother week, which is why I always roll these out. And then let's say I rolled it out basically to the beginning, even if the price is the same, like even right here, price is the same. I have $20 left or so to gain, but if I roll it out to the beginning and move it out another 2 weeks, then I'm going to gain that $100. I still have to buy this back, which means I'm paying the difference between the 100 and the 80 that it would be currently at, but I gain another 100. So I'm able to set myself up for another $80 profit. That's more profit goes in the bank. And somebody else was asking me like, hey, what happens like after when you roll it out? That's exactly what happens. That old premium is already cash. So I guess you could look at you're spending some of that to close it. So in this case, let's say I roll it out right here. I would spend the $20 left to close it, but then when I roll it out, I'm gaining 100. The net difference is another $80 and banking that. That's why if you look on Tasty, I believe Tastyworks, they'll show a chain. So if you constantly roll, so let's say I roll this 20 times, $80 a piece, then you're looking at $1,600 for this $500 credit. And as long as it doesn't, like you can see, it can go down. And I always want to emphasize this as much as possible. This is why this is the best strategy in my mind, bar none. You go up, you profit. You go sideways, you profit. You go down, you profit. You go down more, you profit. But this is the risk. Options trading is extremely risky, right? That's what we're supposed to say. But this stock has to drop all the way down over $100 before I have the potential of losing it. But the beautiful thing is, as long as I'm paying attention, so if it's down in this price and I'm paying attention a week before, I can roll that out, grab more credit, roll it out far enough, and allow the stock to move. If it went and tanked straight down to $200, I'm pretty much screwed because there's not much left. So I know this was a little bit long of a rant. This is definitely a way long rant. about this, but when you're opening these up, optionsprofitcalculator.com is a fantastic tool to be able to use to see how it'll perform. As long as you enter your price, it should be pretty accurate. I even did these, like, oh my gosh, you can see like all these things that I've entered before. Some of them were examples, I think, recently, but this is probably, I was looking at some different spreads on O, and these were just simply so I could understand what was going to go on. I wanted to understand like where maximum gain was. That was something I had trouble wrapping my mind around, especially like with a debit spread, because those are kind of strange. Like you can be in the money, but you haven't fully realized the whole gain. So any questions on this, please let me know. Love talking about it. So hopefully this was helpful. All right, have a good night. Make a lot of money.